improving rural demand too. The government thrust on infrastructure spending, revival in corporate investment, healthy bank credit, and moderating commodity prices will also go a long way in terms of supporting the Indian economy. Despite the increase in interest rate and its transmission, credit growth has continued to grow in double digit and has been broad-based across sectors in the financial year 23. During financial year 23, all scheduled commercial banks credit grew by 15% YOY, as against 9.6% YOY in financial year 22, while aggregate deposit of all scheduled commercial bank grew by 9.6% YOY compared to last year's growth of 8.9% YOY. In the Union Budget for financial year 24, several steps have been taken to push up the capital investment in the country, which will eventually boost the credit demand in the country. We expect credit growth to continue in financial year 24 also, although some moderation might happen here and there. In the above economic backdrop, let me now give some color on the bank's number for financial year 23, as well as for the...
Okay, the SBI management has just started and they're setting the context for the numbers, which we will get back to in just a bit. But let's get a quick reaction from Abneesh Roy of Nuvama on the ITC numbers, which are flashing at the bottom of the screen. Abneesh, we have top line, bottom line, margins, and I think we have cigarette volume numbers as well, which are coming through. What do you make of the numbers? First cut.
Yeah, absolutely. Sales EBITDA is absolutely in line with our end street numbers. So overall, good set of numbers. So I think 5% revenue growth and around 18% EBITDA growth is a good number. In our sense, the cigarette volume growth is around 12%, which is again in line with our expectation of around 11%, marginally higher. So overall, good set of numbers. So this 12% growth in cigarette volume is on a 9% base. So it's again a market share gain for the legal players from the illicit side of the industry. So overall, good set of numbers. So we remain quite positive and we maintain a buy.
It's blockbuster numbers from the hotel divisions of ITC. I think the revenue growth is more than 100%, and the street was anticipating about a 40 to 50% growth. Abneesh, do stay on. My colleague Mangalam is standing by with the fine print of ITC's numbers and the segmental breakup. Mangalam.
Well, these are largely in-line set of numbers coming in from the cigarette business for ITC this time around. I'm just looking at the cigarette revenue growth that's coming at around 14%. The street was working with a number around 15-odd%. So this means that the volume growth for the company has been around 11 to 12%. Again, largely in line with expectations of 12 to 13%. The cigarette operational performance has seen an improvement about 14% year on year. Again, in line with expectations of 15 to 16%. What really has stood out this time around from an ITC numbers standpoint, of course, hotels has grown in triple digits as against a 40 to 50% growth expectation. But that, again, does not surprise the street as much, given the sort of numbers that we've seen from Indian Hotels and Lemon Tree. The star of the numbers this time around for me is the FMCG business that has shown a revenue growth of 19%. And for the first time ever, the FMCG EBIT has reported a double-digit margin. So that's a margin of around 10.2%. That's a big positive. So this is something that we'll have to watch out for. ITC is finally moving away from the shadows of the tobacco business and coming onto its own in the FMCG pack. So that really, is something that my key takeaway from these numbers would be. Volume growth, nothing really to worry about. The agri business has seen a decline of about 18-odd%. Again, the street was working with a decline of around mid-teens, largely because of a high base. And, the wheat export has been banned this time around as well. So wheat exports were there in the base quarter. The other businesses of the company, the paperboards business, has shown some sort of moderation. But while on a reported basis, just the P&L has been largely in line with expectations. The cigarette volumes in line with expectations. The FMCG really stands out, with the hotel business reporting a near doubling of revenues on a favorable base. Let's see whether that continues or not.
Okay, got that, Mangalam, from what you were saying. It looks like a very solid set with some pleasant surprises in FMCG. Stocks still a little subdued, 1.5% to 2% lower. Abneesh, so that's the question. I mean, we don't know whether there's a kind of a buy on dips that starts playing out later today or maybe tomorrow in the days to come. I guess the key question is, given this kind of performance, ITC is trading what, at 25, 26 times 1 year forward earnings. Can we see multiples expand despite the great rally of the past 12 odd months?
Yeah, thanks. Definitely, 12% volume growth in cigarette is a very good number even in Q4. So my sense is even if multiples don't expand from here, I expect FY24 to remain quite strong for ITC in all its key businesses, especially in cigarette. I think the market share gain from the illegal industry will continue. In FMCG, just like we are seeing for other FMCG companies, there will be a margin improvement for the full year in FY24. So we don't need a re-rating further. Even if that doesn't happen, my sense is the earning growth will propel the stock. Of course, hotel value unlock, whenever that happens, that will lead to further re-rating in terms of multiples.
Target price, Abneesh, as of now, and would you look to perhaps, I know it's very early to ask you this, but you'd look to add to it given the Q4 performance?
So yes, we have a 485 target price, and we will again look into how FY24 cigarette volumes are looking, how FMCG margins will pan out, because palm oil and wheat crop is looking better than initial expectation. So yeah, we will look into the numbers, but yes, still we have the upside, and we definitely maintain a buy.
Okay, thanks very much, Abneesh, for that. Let's go back to the SBI chairman. Gurmeet, of course, is still with us. Gurmeet, we're coming to you, so hang in there. But the SBI chairman, Dinesh Kumar Khara, is speaking, addressing the press on the numbers. Listen in.
The bank remains very well capitalized, and we have sufficient headroom to take care of the normal business growth requirement. Our capital adequacy ratio